What's going on today, YouTube? Today, I'm going to talk to you guys. I made a video a long time ago talking to you guys about why it's so dangerous to hold through earnings. And now, since there's a bunch of earnings that's came out lately, I want to show you a little bit of what happened and what I was talking about in these previous videos. If you're new to my channel, I make stock market videos trying to teach you guys things I wish I knew when I first started. Try to make the process a little easier for you guys and make it not so intimidating. So, let's get right into it. Now, I know there are many stocks that came out with earnings, but these are just the ones that I follow. Now, if you want to see that other video, I'll put the link up on top of the screen now. Basically, I just said sometimes the market already has these earnings calculated in, sometimes they don't. And it's just very dangerous to hold through these earnings. If you're just trying to look for a quick trade or you just bought the position, just be aware if earnings are about to come out, because it could be you might want to just wait until after earnings. And here's a few examples of why. We're gonna start off with U.S. Steel, United States Steel Corp. Its ticker symbol is X, and right here, this is when earnings came out. If you look, when I hover over it at the bottom right there, it does say earnings were 29 cents estimated and the actual were 32 cents. Okay, so guess what, guys? It beat earnings. It beat earnings expectations, but it was not as good as the market felt it was going to be, even though it beat expectations. Right here, that day earnings came out, this stock dropped around 12%. That's a huge drop for one day. Just because it had good earnings, it beat its expectations, but the market thought everything was going to be even better than it was. It had a 12% drop. So like I say in the other videos, don't ever go in just expecting them to have good earnings and then the stock to shoot up. Because if you're just going in for a quick trade and you don't want to hold it for long term, you lose 12% right off the bat. I mean, that hurts, especially if you get all nervous, scared, and you cash out right away. Now, I mean, this isn't saying it's already back up about halfway from where it was. It's not saying that the stock won't go back up to where it was before earnings came out or even higher. But if you're the type of investor that invests right before earnings expecting it to go up and it goes down, you get scared and cash out, you're going to lose a good chunk of money that way. And earnings are probably going to hurt you a lot more than they're going to help you throughout your investing career. Alright, so we'll keep on going. Just to show you other examples of what happened during earnings, we'll go to Ford. Ford Motor Company, they had good earnings. They beat their expectations. The market wasn't calculated in for them yet, so yes, this stock jumped up about 3%. So I'm not like, it doesn't always happen that stocks fall or the market already calculates for them, but it's risky. Just be aware when you're getting in, if earnings are just about to come out or if they're just happened or what's going on. Now we can go to Facebook. Now Facebook, on the other hand, now if you follow all the big scandals and everything else, they had a big scandal, well, just pretty much saying they're mistreating people's data, selling their people's information, selling their private information. And that's what this big drop was right in here. So a lot of the people, a lot of the market, everything, they expected, when earnings came out, they expected a further drop in this stock because they didn't expect them to have the revenue that they previously had. It turns out that they beat their estimated earnings and the stock shot up. Now the stock shot up from there about 8% overnight. You just have to be caught. I mean, you don't know. That's what I'm saying is there are some major moves. You saw U.S. Steel drop 12%, Facebook jumped up 8%. If you're getting in for a quick trade, you don't know. It could be like a 50-50 chance if this stock's going to jump or if this stock's going to gap up or this stock's going to gap down. You just don't know. Look at Nucor. Nucor, which is another steel company. Earnings, estimated and actual were pretty spot on. But I guess the market didn't like it because stock fell 3% right after earnings came out. You have no idea. So if you're not going in for the long term and you're just buying, don't buy around earnings. Just wait to see what happens after earnings. If it falls down and you still want to get in the stock, get in. If it goes up and you still want to get in the stock, go in then. If you're trying to guess earnings, it's not a good time. If you're just trying to get in, expecting good earnings, shoot up, and then get out. It's not a good time. It's not a good game to be guessing like that. We can look at Oracle. Oracle, earnings came out. Look at that drop. When the earnings came out, this stock dropped around 10%. I mean, US Steel was even worse, but still, that's just a major gap. Are you willing to risk that kind of a drop for the biggest gain we saw so far was Facebook at 8%? Skechers, another example. Earnings came out. Estimated 77 cents, actual 75 cents. So that's like a 2-cent difference. And Skechers overnight fell 24%. So, I mean, the point I'm just trying to get across here is you just don't know what's going to happen. They could be calculated in. You don't know if the market's going to like the earnings they see or if the market is not going to like the earnings they see. Spotify. Now, this chart isn't as big because it just had its initial public offering not too long ago. But here it was estimated at about minus 34%, and the actual was $1.21. So I'm amazed this stock didn't fall even farther than it did. I mean, yeah, it still fell 10%, but that's a big drop for estimated versus actual. So here in a situation like this, I guess the market didn't even think, they thought it was going to be even worse than $1.21, so it wasn't as bad. Who knows? I mean, it's a hard guessing game if you're going to play stocks like this. And for our last one, we'll look at Molson Coors Brewing Company. You can look at their earnings. They were estimated 83 cents, and their actual was 48 cents. So look what happened that day. Closed up here at 71, dropped down there. So that's about a 6% loss. And then by the end of that day, once everyone saw the news, that's about an 18% loss. So I hope this video helped show you guys different examples of what can happen through earnings, how stocks can react, regardless if they are good compared to what they are estimated at or if they were bad. It's a big guessing game. You don't know what the market already has in store for them, and it's just not a good time to go in right around earnings because this is when these stocks can have some of their major moves of the year. So if you want to be that risky, take that chance. It could be a good idea for you, and you could make out on some of them. But out of the 8 or 10 stocks I just went through, majority of them were big drops. So just be aware of that. If this video helped you out at all, and you want to see future videos like this, subscribe to my channel. If you have any questions about stuff like this, leave a comment below. I'll be happy to get back to you guys. And I will see you guys next week with another stock market video.